here on the show this morning for our cash tag segment. Andy, good morning to you. This is a fun one. This is one that, in this space, I think Uber clearly is at least the one that's associated. If you're going to go to someone's house, you're not saying, maybe you do. Maybe you say I'm catching a Lyft. But I think most people say, grab an Uber, regardless if they're getting a Lyft or an Uber. So it's definitely kind of the name associated to ride sharing. But now it's a pretty major player in the food delivery space as well. But has it been enough to offset what's probably been a struggle for Uber throughout the lockdowns?
No, it certainly helped, but it's definitely not enough, at least in terms of what we're watching at LikeFolio, where we watch what we call purchase intent mentions. And for Uber, what that means is the number of people talking about getting a ride with Uber, installing the app, or getting meals delivered through Uber. Significantly down. All three of the kind of key metrics that we track, which is, consumer buzz, consumer purchase intent, and consumer happiness, all three of those down year over year. And we just wonder if investors' patience with, quarantine excuses is starting to wear thin. Purchase intent mentions down 35% year over year. It's just a really tough time to be in this business. I think long-term, Uber has a lot going for it from a technology perspective, from a market share perspective. They're acquiring Postmates, which will give them, a real chance at getting the lead in third-party meal delivery. Right now, DoorDash and Grubhub doing a very good job. But with that acquisition of Postmates, Uber Eats becomes kind of that other big player. And, the Uber name is strong, but right now there's not very many places to go. There is a good reason to get your food delivered since a lot of restaurants aren't open or inconvenient to go to. And so, I think this is one of those where it's going to be really tough to see how Uber comes out with a very positive message. I think that the quarantine has certainly accelerated people's usage of third-party meal delivery, but it's tough to see how they come out of this in really great shape tomorrow. And I do think that, from a long-term perspective, there might be some investors out there that are thinking about the opportunities that this unique point in time presents, because Uber does have a lot going for it from a technology perspective that we're looking forward to out into the future. But I think this is going to be a little bit of a tough report for them coming up tonight.
Yeah, Andy, Uber's ride sharing numbers are going to be down and horrible. And in all honesty, how could they not be, frankly?
Right.
But the question really is, if you're trading this name, is can Uber Eats and Postmates make up for that? Can you imagine a scenario where Uber Eats revenue tops that of rides? The expectations for Uber Eats is to grow 100%. The question is that enough? Can they withstand, can they hold on during this period of, delivering basically whatever someone wants to get delivered that they're working out to trying to deliver? Is that enough though? And can you see where the Uber Eats revenue might top ride sharing revenue?
Well, I guess anything's possible. I think that Uber Eats is definitely the growth story that the company is going to want to focus on. I think that they probably have an opportunity to talk about cost cutting and those types of things that have benefited a lot of these companies that have seen major downdrafts in demand. There's also an opportunity from a positive perspective to talk about, what's unfortunate for most of the world, a high unemployment rate and a lot of people looking for ways to make money. Kind of feeds right into the Uber model of the gig economy and enabling those folks to make some money using their car. So there's definitely some reasons to think they could come out with positive spins. I just think that at this point, whatever it is, 5 or 6 months into a pandemic, it really starts to wear thin in terms of investors starting to wonder how much longer can this last? Because remember, this company doesn't make money. They lost $2.9 billion last quarter. They're losing $1 billion a month. So it becomes tougher and tougher for investors to be invested for what the promise is 5 to 10 years from now. as rosy as that may be. They're working on what they're calling their super app, where you can use the same app to do all of these things, and they really become the logistics provider of the local economy. I think that's a really compelling story. It's just a tough one to sell right now in the middle of a pandemic.
Andy, is there a medium to long-term risk to this business? I mean, the core business of ride sharing, given what's going on in terms of the work structure. And what I mean by that is a huge portion of Uber's revenue isn't just me or you going to a bar or a friend's house. It's actually people using this, multiple times a day commuting, or if they're traveling for work, getting from the airport to the location where they're staying. And right now, there's just that's just not happening. More people are working from home. Business travel is almost at a standstill. And if that's a huge, catalyst for this business, and it's not coming back anytime soon, I don't see how, that's going to be a good story for Uber going forward.
Yeah, no, I don't either. That's why I'm saying I really don't think that they can come out and paint too rosy of a picture for the next couple of quarters at least. On the positive side, I do think that when travel and commuting returns, Uber's in a very, very strong position because of its brand name recognition. Its place on everybody's phone is already established. So they're in good shape there from a competitive standpoint. Probably not a whole lot of new entrants coming into the foray during this time. So that's good. So long term, there could be a little bit of a moat behind them, but it's a really painful one for them to get through right now. There's no doubt.
Kevin, $9 off the highs that we set basically the first week of trading. As you recall, we were covering this live when it was coming out, and it's really not been the performer that so many thought it was going to be. And then you throw this pandemic on top of it. It's been a struggle for Uber investors, Kevin.
Yeah, exactly. And just to follow up, as positive I was on Uber Eats, they're still projected to lose money. They're not profitable. The expectations are that they're going to lose $276 million. And that's the part of the company that's about to grow 100%. And it still doesn't make money. So I think the biggest problem, as you and I, Alex, and Andy's been on several times talking about this, they got to find a way to make money and be profitable. I mean, even their fastest growing business is going to lose money this quarter. So yeah, Andy's right. This is a tough story, and they're lumped into that pile with cruise lines and hotels and all the recovery trade. And the recovery is not here yet. It's not here in the quarter that they're about to report. So all they really have is a promise of the future and a positive outlook. That's all really that I think Uber's going to be able to report today, guys.
Andy, so these are kind of the short-term stories, obviously associated with Uber, but you mentioned stuff about its tech. You mentioned about kind of this future that Kevin's alluding to. When compared to a company like Lyft, which is often associated as its primary competitor, and other companies, whether that's NVIDIA or Alphabet or Tesla, that are more the tech companies kind of associated with this space, is this still a long-term story that you and LikeFolio are interested in and potentially being investors? Or is there just too much risk in the short term that, this is wait for a sell-off and a better opportunity?
No, I think long term, I'm still optimistic long term because I think Kevin's point is right. They lose money, but all of that changes. You can kind of think of Uber as a proxy bet on autonomous driving. If there is autonomous driving, if cars can run around the city without a driver to pay, then those billions of dollars of losses almost instantly become billions of dollars of profits. You've got Uber in the pocket of every consumer, used to getting their meals through it, used to getting their transportation through it, and the distribution that they have is incredible. The technology that they have is incredible. So, they need for that to happen as much as they need for the pandemic to be over and for people to start traveling again and start doing those things. Even more important to me, I think, for Uber long term is the acceleration of the move towards autonomous vehicles, because that is their whole bet, in my opinion. And I think if it works, it could be an unbelievable company that dominates globally at a local scale, global scale at a local level. But if it doesn't, then this could be a zero. And I think every investor needs to know that. This is almost a binary play. It's almost like Tesla was, or kind of still is. It's a binary play. This could be a zero, or it could be an absolutely portfolio-changing, life-changing investment. And you got to measure that risk appropriately. There's a whole lot of risk in this name.